All right, and welcome back for another episode of Carnivore Trade. Today is Wednesday, February 16th, 2022. So market's squeezing higher here. Is the squeeze on? Well, let's find out. So we got the Fed minutes out today. Also, NVIDIA earnings. That stock is settling basically at the flat line, or basically where it closed right now. So that is a positive that it's not breaking down in the meantime. But anyways, market's having a nice little pop here in the afternoon session. We had the Fed minutes today, and basically the Fed kind of just stayed the course. They didn't really say anything new. They didn't say anything crazy, and the market liked that. One way of looking at it is that the market was more relieved that the Fed didn't say anything surprising or try to do anything crazy. Another way to look at that is that there was a ton of puts to burn in this market. I showed you guys this last week, and I've really been talking about it, almost every day here. But this 450 straddle here, I do expect us to go up and tag that. That's actually the wrong date there. Looking at the 18th, that's Friday. So this is the OPEX. There we go. So we got that straddle here, 62,000 there on open interest and 65 on the other side there. That's where I think we're ultimately going, and that's kind of what I think this move was. Whatever the Fed said was basically the market's excuse to go where it wanted to go anyway. And then you look on the February 16th change, so that's today. There was just a lot of put buying going on. A lot of people buying puts into the hole Thursday, Friday, Monday. And look at all these, like 220,000 in volume here today on that 440, 200,000 on the 443. They were really putting up a fight here at 443 and 444 earlier today. Those all got torched. So kudos to the bulls, and a nice update for the market. Although, QQQ barely scratched, it actually was still negative on the day. Dow was still negative. Russell was positive. S&P was positive, but it's more of a kind of a moral victory than anything. So because we gapped down, started to break down a little bit. By the way, I messaged the members in the forum today, and I said, look for a fake breakdown or some type of a fake move here before the Fed. Typically whipsaw Wednesday, the Wednesday before OPEX. Whichever first crazy move happens, or, whichever move happens first is usually the wrong one, and they typically whip it back in the other direction, and that's exactly what happened. And again, the Fed minutes was just the excuse for that. Anyways, let's get over here and talk about some sectors here. We'll talk about the triple Qs first. So they actually were flattish today, but again, a moral victory, just coming off of the lows and digging all the way back to the flat line. So this could be setting up to attack this red bar high. But again, it's been a tech-led rally. It's been a small cap-led rally. You can see the Russell on my screen here made a higher high from yesterday, and the Russell was really leading all day yesterday and all day today. So again, the most beat up sectors, tech and small caps, are the ones leading the charge on the way back up. That is typical. Again, I talked about yesterday that you stretch the rubber band, the farther you stretch it, the farther it's going to go. And so, the more beat up these stocks are, the higher they're going to go on the rebound. Doesn't mean that they're going to go back to leading full time, but on the rebound leg, they're going to be leaders. And likewise, the Dow, which was the strongest on the way down, is now kind of getting the weakest bounce because it was the least oversold. But seeing the Dow Jones Diamond here down just 0.16%. But again, a moral victory for the markets, finally getting some kind of follow through and getting through that 446 area on the SPY. Anyways, let's go over here. So speaking of tech, semiconductors flat. NVIDIA had earnings, so that is still flattish after the bell, if I'm not mistaken. Last I checked, they were doing okay. Got up all the way up to, I want to say 275 and as low as 255. Yeah, hanging out at 263 right now. Closed at 265. So nice move for the semis. And a lot of this, yesterday NVIDIA was up 9%, and then it gapped lower. So that's part of the reason why the SMH was kind of flattish today. But outside of that, it was very strong. Cloud software, on the other hand, was not very good here. Down 0.75%. We've been talking about this for really the whole move now, really since November. We've been saying look, cloud software is just a very weak sector. I mean, look at the bounce here. And look at the sell-off here. I mean, you've probably retraced about 25% of this move here, which is not a big move. When you look at the semiconductors, they're still really not that far from all-time highs. So cloud software, definitely a lagging sector here, and definitely make note of that moving forward. Anyways, Dow Transport's pretty much a quiet day, still kind of inside of this red candle. If you can get above that high, then maybe it goes up go up here and challenge those moving averages, that 15.8 area. Ultimately, kind of a muted move here for Dow Transports. Let's look at rates. So rates continued higher today, although not by much. They did finish green, but they may need to do some backing and filling. I still think they need to pull back. They're getting pretty long in the tooth, but what can you say? They're still, they've just been a runaway train lately. 30-year up a little bit more, actually had an outside day here, so almost got up to 2.4. Like I said, I sold my TBT last week. I believe it was on the 10th we sold the last part of our TBT position. I didn't think we would get up to 2.4 this quickly. I thought we'd have to at least do some backing and filling first. But anyways, rates, nice move there. One thing about bonds I want to talk about, though, is high yield. So high yield got a really nice bid today. This is a major positive for the market. So high yield's obviously been in free fall for the last basically month and a half, 2 months. And I told you it was going to have some support around that 82 handle. You get all this kind of wild chop here, and you got these pivot lows here and so on. I said it was going to have to hold that 82 handle. That has happened. It got a nice bid here. So if this can get a little bit of a rebound, I'm not saying it's going to go ripping higher, but if it can get a nice rebound rally, that will give some wind to the sails to the market. And we could see a short squeeze again. Like I've said, there's been a lot of people trying to short the spiders and the tech into the hole here. And I just, that's just not the way you want to do things. You don't want to short, you don't want to chase at the lows. But anyways, let's flip over here. So home builders, not much to talk about, slightly green here today. Again, with rates green, these are not going to get a bid here. And same thing with the VNQ. Although, again, I've been saying this isn't the worst pullback pattern here. You can get above that 20 moving average. You could possibly make a higher high and get up to that 50 MA. I wouldn't rule that out, but it's all contingent on do yields actually pull back for once. XLF here, so a flattish day, pretty quiet here. Finn's not doing a whole lot. Broker dealers up 0.25%. Morgan Stanley was actually red today. Goldman red. JP Morgan was actually green. So a bit of a mixed bag, but ultimately pretty quiet move here for financials. And again, rates were flattish, so it makes sense there. XLE popped off the 20 moving average yesterday. We talked about that. Got a nice bid today and then came off the highs, closed near the lows. So, a little bit of resistance up in here in that 70 handle, but again, energy's in a strong uptrend, and we'll kind of leave it at that. XOP actually finished red after gapping up, so a bit of a rollover. Again, it's it's just basically consolidating sideways, so nothing really wrong. The big winner today, really in almost the whole market, OIH. So new 52-week highs finally. We were talking about how the OIH was kind of the laggard, right? Compared to the XLE and XOP. But OIH actually catching up a little bit here. Nice power bar yesterday, and then a gap up today. Did finish off the highs, but still made a new 52-week high, so we'll give it the benefit of the doubt. Crude, again, pulling back here. So we did have a little bit of de-escalation further from the Russia-Ukraine situation, but I mean, look at this uptrend. You haven't even touched the 20 moving average since 12/21 here. So you haven't even touched it. It's completely unblemished. So until we get a sell signal, if I get a sell signal on crude, I'll be the first to let you know, but I don't think we're really going to get one right now. I think crude can get up to 100, maybe even higher. So that's really what it is until we see it at least close below the 20 moving average, if not make lower lows. Crude can hold up. Anyways, flipping over to nat gas here. This is just all over the map. This is a literal roller coaster pattern. So I mean, look at this. Up, down, up, down, up, down, up, down. Now finally, trying to go back up here, stalling out at that 100 MA. Again, it's the same exact pattern right over, repeating itself basically a month later. But yeah, nat gas all over the map. No real pattern here, but definitely entertaining to watch. Dollar index, again, pulling back a little bit today. Nothing too major. It is strange, though, to see rates green 2 days in a row and the dollar red. So maybe it's OPEX games, but definitely something to keep an eye on here. Gold up 0.75%. And again, gold is a fear trade right now, especially with the uncertainty, foreign policy and stuff like that, Ukraine and whatnot. However, even with it walking back a little bit today, gold was still green. So nice little move there for gold. And I'll give it the benefit of the doubt. It had, if we take a look here at this was a pretty ugly reversal candle yesterday. And you pared back almost all of that today. So a nice recovery on gold, actually holding up okay. And we'll continue to watch it into next week. That's going to be the big question, right? Because every time, we talk about this every month almost, or every month that they run it up into OPEX. do they slam it back down next week? You know, especially over the weekend, if you know, Biden calls Putin or something and they come to an agreement and everything gets de-escalated, you know, does gold sell off next week because people are no longer afraid and uncertain and so on and so forth? So that's something to watch for as well. But again, nice recovery on gold today. That 1880 area is very strong resistance though, so just keep that in mind. Anyways, silver, same kind of deal, although silver is much weaker technical position. Did not get back as nearly as much of the losses from yesterday that gold did. Let's move over to platinum. So platinum was on the move today. Again, I've been telling you guys I love this pattern. Nice pop there. This has upside to 11, maybe 11.15. If it overshoots, it could probably get up to 11.30, 11.40. But beautiful, beautiful pullback pattern there and nice pop on platinum. Palladium, kind of a pause day here, not doing a whole lot. But again, I showed you this weekly chart yesterday, and this is a nice pop. 1, 2, 3 pullback. Nothing wrong with that there. Copper here. Again, just kind of a quiet day. I got rid of that 451 area. I don't really like that anymore. I think we've traded through it too many times. So right now, short-term resistance is going to be this red bar high at 463. So if you can close above that, that would be a positive in the short term for copper. All right, let's flip over to Bitcoin. Again, not a whole lot. Crypto pretty quiet here, quiet day, but I do like the pattern here. So nice pop, and then you kind of have a hammer candle. You see a little bit better on Ether right here. So pop and then hammer candle. That's a bullish candlestick. So nothing wrong with that when you see that. Again, I still think 48,000 is a pretty big wall. Now, when you take a look at what happened here, he came down, and then we put in this bear base for about a whole month. So we're not going to be able to just get through that. It's going to take some backing and filling, or it's going to take some massive volume, you know, some type of a massive change to essentially be able to push all of those bag holders out of the way. Otherwise, it's going to be, you know, you're going to have to go through an accumulation phase if you're going to go and attack, you know, 52,000. But again, bottom line, 48,000, that's kind of the area that I'd be watching in the short term. Anyways, flip back over here to the spiders. So essentially, yesterday I said we'd probably be green today and maybe probably green again on Thursday, but however, possibly maybe having a late fade on Thursday, if not Friday. And kind of the reasoning for that is because I think that we're going to close right on 450 Friday afternoon. So we got our green day today. It wouldn't surprise me to gap up tomorrow. Nvidia's earnings were fine. The market had a strong close. Again, there's a lot of shorts that are probably going to get squeezed if we do gap up. So it wouldn't surprise me to get up into the low 50s tomorrow. And then, you know, maybe we fade into the afternoon just a little bit, and then I would think Friday we could probably settle back in around 450. At least that's kind of what the general synopsis, you know, I've got lined up here. Doesn't mean it, you know, can't happen. Something else can't happen. Doesn't mean they can't figure out another straddle. But 450 has been the number here really for the last couple of weeks. So that straddle's been there, and it's very rare when you have a straddle like that it doesn't go up and get tested, or you know, the market just wants, it's like a magnet. The market has to go up and touch that level. Anyways, guys, take care. Come find me on carnivoretrades.com. It is a 2-week free trial now. After that, it's $15 a month. And ask any of the members, you can pay for years worth of the service with pretty much one trade. Anyways, guys, thanks for watching. Like, comment, subscribe. Take care, and I'll talk to you all tomorrow.